Hello traders, Cousin Vinny coming to you from theclosingprint.com on September the 8th, 2019. In this edition of your weekend video newsletter, we'll discuss the indices, all of which moved higher, shaped by non-farm payrolls on Friday, which came in 20% below expectations and remarks from the Federal Reserve. Powell talked about the Fed seeing fit to lower the expected path of interest rates. He gave credit to the Fed, which has supported the economy, continues to look forward, and mentioned that trade uncertainty is hurting business investment and confidence. Yet he expects problems to be contained. He doesn't see any need for forecasting an expected recession. All of these factors helping with the uncertainty in trade negotiations as the markets moved higher. Tech did look very strong last week, with Intel up 7.4%, beating out the rest of the group for the week. We did take a position in Intel last week and have a trailer on. We're looking to add to that when the setup fires. Most of our indicators are bullish for the week. The dollar did pull back. The put-call ratio, however, is at an area where we normally see pullbacks, so there is a little bit of a headwind, but NYMO and NAMO just started bullish cycles, and that's something that will most likely prolong this upswing as we exit August seasonality, the worst month of the year. Bonds are starting to show signs of faltering at highs, so that would indicate the bond stock ratio is still bullish. Junk bonds are bullish, HYG is bullish, and the Dow Composite is breaking out of a range, as are all of the other indices. The S&P 1500 had a bullish cross, and we see gold and commodities responding to a lower dollar. Gold had pulled back though, breaking its current steep uptrend as traders take profits. Copper, one of the things we're watching for a forward look in the economy, is in a descending wedge, but apparently is about ready to break out of that wedge and move in a bullish direction. So keep an eye on copper this week as well, as West Texas crude and Brent have been 16 weeks below its 20-week moving average, potentially following through in the short term, which would be another bullish indication for the markets. If crude gets rejected and starts moving lower, that would be a headwind. The heat map is looking better. We had the XLY XLP ratio making a bullish turn. That's something we want to keep an eye on. Leading were financials, technology, and industrials, with biotech being the weakest. Heat map for the international markets started to improve a couple of weeks ago, still looking very good. We'll look at some IBD 50 names showing relative strength. Also some MarketSmith relative strength names, some TTM squeezes in yellow, and stocks finishing higher on volume, 100% greater than normal on Friday. Bukowski has 505 green with a CPI signal mixed green since August the 30th, moving from 76% to 77.8% bullish, but not overextended, with 12 bearish patterns, 49 bullish patterns, and 190 patterns waiting for a breakout. The numbers in parentheses are the previous week's tally. Bottom line, we did have a very good start to September. However, we could see a little bit of a pullback first thing on Monday, Tuesday. So as usual, we'll wait for the opening range on Monday to see how stocks fare along with the indices. The spiders on the weekly time frame showed 2 weeks in a row pushing higher, starting the first week of September. Seasonality behind us now, August being the worst month of the year. RSI is rising above 50, and MACD is attempting a turn, while the daily shows this very large volume by price support zone now behind us as we push above 294, 295 last week. RSI on the daily as well is above 50. We did see a doji on Friday, so that gives us a little bit of reason to hesitate before getting too aggressive on Monday. While MACD is above its signal line, showing the bulls are in control. Thursday we had really nice above average volume, and we finished the week on Friday just below that level to end the week. That said, it was important to note that the 60-minute time frame did show a follow-through with a series of higher highs and higher lows, potentially building. Institutions are buying more stocks on the uptick than they're selling on the downtick, like they were in August. NASDAQ weekly had a similar look. 2 weeks in a row we've moved higher off of that 50% and 382 Fibonacci level. RSI is above 50 and volume tapered off compared to the previous weeks during August when the market sold off. Small caps tried to bounce. It did hold this level here at right around 145. So that's good, but we need to see this breakout above the 50-period moving average on this weekly time frame and this descending trend line right around 159, 160. RSI needs to get back above 50 to show that risk is on with respect to small caps. With that in mind, the S&P 1500, which does have 600 small caps, 400 mid caps, and the S&P 500, gave us another buy signal, looking like a potential breakout of this descending channel, with histogram confirming, price action breaking above this 22 days of resistance in the month of August, starting an uptrend in September, leading into the best months of the year with respect to seasonality. Bollinger Bands are opening up, telling us to be open to the idea of a fast move to the upside. Won't be a straight shot. It usually backs and fill, but we would be looking for follow-through this week. If we look at the New York Stock Exchange composite, we do have more new highs than new lows. We're remaining above the zero line. Note the black moving average is climbing. That's bullish. In addition, we have the New York Stock Exchange advanced decline moving a bit higher. Now this is a bit skewed because it has over 600 entries that relate to mutual funds and ADRs, so it does give a little bit of a skewing effect to the New York Stock Exchange advanced decline. That's why we look at the previous chart of the S&P 1500, more true to the advancing versus declining stocks, so it gives us a good read. This is just a double check, but it is rising to new highs. All of this is happening, of course, as the indices start a bullish cycle. In the middle of August, we saw rate of change direction. The Wilshire 5000, a broad measure of market participation, broke out of this 22-day range to start September on above average volume. In addition, the weekly cycle has turned higher as well, looking for a follow-through into the best months of the year. Note the volume and price action along with RSI to start the week. Breadth is improving, and if we look at the advanced decline percent, break it down by the S&P 500, the mid caps, small caps, and the NASDAQ at the bottom, we do note that the NASDAQ hit 30%, reversed a little bit. The mid caps are very close, small caps are lagging, of course, and the S&P 500 is above 30%. This is just telling us to look for a little bit of weakness to start Monday and Tuesday trading while the bullish cycles continue. This being the NAMO McClellan oscillator for the NASDAQ, we can clearly see the cycle is up, black moving average, with NASI turning up as well, while NYMO for the New York Stock Exchange McClellan oscillator showing the same cycle, looking for a crossover and a back and fill along the way. We're not expecting a straight shot back to the highs, right around 13,250 in the next few weeks. And finally, we have VIX on a green signal. This is a 60-minute time frame flipped so that we can get a green or red signal. Short term, this is telling us look for higher highs and higher lows on the 60-minute time frame. while the daily continues its mean reversion, passing through the 50-period moving average now, headed back down to the 1213 zone, potentially leading to a move higher for the S&P 500 as fear dissipates. Finally, we have the total put-call ratio in the top panel, showing you a move down to the lower Bollinger Bands. The previous time that happened in the end of July, it marked a turn or a top, so that's why I'm a little bit cautious to start the week. We've had a nice uptrend for the first week of September, but these moves down to the lower band typically result in a little bit of weakness or a flag in the short term. We'll have to watch this to see if it rolls over, and if the put-call ratio gets a little bit lower, that would show more bulls than bears and a reason to be contrarian in the short term. The bond stock ratio in the lower panel is bullish for equities. As stocks become more favorable, this red line or ratio will continue to move lower between the UST 10-year and the S&P 500. So with that in mind, we're looking for this 12-month uptrend to falter for TLT on the weekly. We're starting to see profit taking with these upper wicks over the last 3 or 4 weeks. Looking for a minimum pullback to the rising 10 EMA in this case, right around 140, 140.50 in the short term, with RSI overbought, looking for this to pull back in. The flip side is junk bonds and high yield corporate remain above their 20-period EMA on the weekly time frame. They're above areas of supply as we push higher. This is telling you that investors are chasing yields while the Fed is lowering rates. Last time we failed was September and October when price action on this instrument continued to move lower. We didn't see that this time, which gave us a reason to be long in the markets despite a short-term pullback in the month of August. In addition, we're looking for the 10-year Treasury yield to move higher. We can see a little hook on the weekly time frame, potentially signaling a move off of this level like we saw back in 2012 and 2016, which led to nearly a year swing in the markets, 44% in each case the last time this moved higher, and the 10-year continued to rally. So we'll continue to focus on the 10-year yield this week as we lead into the seasonally strongest months of the year. The US dollar, of course, is still in a bullish trend, building higher highs and higher lows. We'd like to see the dollar move back towards the 50-period moving average to start the second week of September. If it starts moving higher, that would just put pressure on the markets and commodities in general, which did get a bounce last week. We have copper in a descending wedge pattern, bullish through Wednesday and Thursday, a flag or doji on Friday. We'll look for this to follow through. This is a leading economic indicator. If this starts moving higher, look for construction related names and builders to start an improving bullish pattern. While precious metal traders, gold and silver, started taking profits last week on Thursday, looking for this trend to continue. If it does break down, however, we got a reverse Kirby back down to this consolidation zone and the 50-period moving average here in green, while RSI continues to drop. That said, we do have crude oil below its 20-week moving average for the past 16 weeks. This is a positive correlation to the equity market, so we want to see crude oil start to pick up some strength. Higher lows, we just need to see some higher highs and a move back above the 20-period EMA on this time frame if we are bullish. Bears would want to see the markets roll over here along with crude oil leading the markets to the downside. Sectors have been improving as well. We have the XLY consumer discretionary to XLP consumer staples defensive sector showing a bullish cross. These moving averages are starting to give us reason to be more bullish, as we saw back in December and January, crossing over again in June and July during that uptrend, and then turning a bit lower in August, giving us a reason to take profits into strength at the end of July. So long as this crosses over and starts moving to the upside, we can expect to see bullish things to come in the months leading into the end of the year. With this in mind, we expect to see the sector heat map improving from week to week. Each Friday this is updated. We want to see more lime greens and chartreuse greens and less red and orange. That pattern is unfolding as we go into the seasonally strongest months of the year. We also see the international markets improving as well. With most U.S. sectors strong, the real estate shares were climbing. Transports improved markedly from last week. We were looking for a move above the 200-day. We got that on Thursday. Bollinger Bands are opening up top and bottom, telling us to expect a fast move. Materials followed through on their 200-day bounce. Communications stocks like Netflix, Disney, Comcast, etc. also moved higher, bouncing off the 20-period moving average, the center of the Bollinger Bands, finishing higher for the week, RSI above 50. Energy improved as anticipated. We told you that September and October are usually the better months of the year for the energy sector, so look for this to improve. Financials were leading last week as well. Industrials and technology led last week. Last time it touched the 200-day moving average was back at the end of May. Has since improved, producing higher highs, higher lows, near the highs of the year. Even staples continued its bullish trend, while consumer discretionary outperformed as well. Healthcare, along with biotechs, were weak, and we did see utilities pull back as well, while sectors overall moved higher and are supportive of a bullish trend in the short term. Looking at the IBD 50, we only have about 10 stocks that meet all of our criteria. Some of them are extended, like ACGL, Arch Capital, while other stocks are just beginning to push through their moving averages, like Baozun. We're looking for a follow-through on Baozun. Copart CPRT got a lot of press last week. This company helps insurance companies with flooded vehicles, restoring them and reselling. As one of the more profitable names in this industry group, it popped on Thursday, followed through on Friday. Look for that one to continue higher as well. The REITs continue to perform, like CTRE, Care Trust, following through on a bullish pattern. Moving along its 9 EMA, note the wicks underneath these candles. Buyers keep stepping up, looking for volume to increase on Monday and Tuesday. If you're thinking about a follow-through trade on this one, or if you already have a position, looking for targets at 24.68 and 25.17 in the short term. If we do get a swing higher in REITs, RSI is above 50, telling you to respect the trend, which is now bullish over the last 3 or 4 weeks. The card payment processors also began a bullish turn. We saw Visa, MasterCard, and others swinging higher. We have Discover Card back above its 20-period moving average. RSI is above 50, volume increasing. We're looking for a follow-through. We have the 9 EMA about to cross up through the 20, the dash line. That would support price with a potential move to the upside, targets 84.22 and 86.08 in the short term. JCOM is also improving. J2 Global. This company provides internet-based fax, voicemail, email, and call handling services worldwide. What I'm looking for is this breakout zone here, the blue being the buy zone with annual sales and earnings climbing, along with IBD metrics improving and RSI line climbing on above average volume. We're looking for this to move back up to this 92 pivot, potentially form a little handle and then break out. You can see a much larger cup and handle pattern, a sideways base basically. Looking for a breakout in the short term with earnings out in November. In addition, we saw some strength in XLY, the consumer discretionary, and XRT, the retail specifically, especially with Lulu moving higher. Many of these stocks followed through. Whenever you see a gap and go like this on above average volume, that's telling you institutions are picking up shares like they did back in March. On the gap, the stock continued to move higher. Again in June, a move higher. Looking for this to follow through as institutions fall all over themselves buying shares. At a minimum, we want to see a consolidation here like we did with Roku. Volume indicating institutions were buying shares. Looking for a follow through, as we also saw in Target. Gap up, lots of volume telling you institutions are picking up shares. Look for a follow through. The same with Costco, which is looking very strong going into the second week of September. Universal Display Corp, that one also looking pretty good. Gapping up on Thursday, looking for a follow through. Right now I'm looking for a flag, RSI to stay above 50 and volume to point to potential bullish follow through. And for Stryker Corp, SYK, to continue this bullish trend. Each time it comes down to the 20-period moving average, buyers step up. RSI is above 50, confirming. We'd like to see higher volume and for this stock to continue its nice bullish trend along the 20-day moving average. Once again, the payment processors, Visa, MasterCard, Discover, and others continue their bullish trends. Gap up on Thursday for Visa. RSI is above 50. Respect the bullish trend. The 20 period should turn up and follow the 9 EMA higher. We saw above average volume on Thursday and Friday, telling you institutions are involved, looking for a bullish trend to develop and continue for Visa this week. Some additional stocks that showed up on the MarketSmith Relative Strengths scan. You can see Horace Mann Educators along with EDU and TAL, both of those being Chinese education, tutoring related stocks, also moving higher. HMN is pushing into the buy zone just above this breakout pivot. You can note the big cup and handle pattern. Looking for follow through on above average volume. We've got very good annual sales and earnings. Coming out of 2018, there was a dip, and then into 2019, back up to $2.24 for an improvement of 229%. We'd like to see IBD metrics improve as this stock breaks out. Watch the weekly. We have overhead potential, breakouts above this zone around 47.48. Then you take the depth of the cup and project that into the future. Year end, maybe this gets up into the 50s and 60s as education stocks continue to see bullish trends develop in the short term. Thomson Reuters also right at its pivot breakout zone and buy area. The blue shading, we're looking at annual sales and earnings climbing, IBD metrics improving, relative strength line climbing as well on the daily as on the weekly. You can see this little cup pattern, continuation on this big breakout, followed through with relative strength line at 94 and climbing. Here are Thomson Reuters competitors, and I would look at some of these for potential longs as well. UFI, we saw this one last week, starting to see some above average volume on Friday. Looking forward to break above the 200 period moving average. On the weekly, we can see some projected areas where this stock has been before. Looking like it's building the right side of a bullish pattern, this being the markdown period a base pattern where institutions pick up shares, and if you've read my book, this starts phase 2 of the current cycle, which is typically the longest in all 4 phases. Aqua America, one of those utility stocks. We've got to keep an eye on utilities to see if they hold up. Interest sensitive names. It's in a nice bullish trend after this flat base breakout. It's still close to its blue or buy zone with decent annual sales and earnings and good IBD metrics. We'll watch for this stock and some of its competitors down here in the left corner to continue higher. The green zone is the profit zone. That's typically 20% above the breakout zone, the blue area. Stocks showing up on the 100% or greater volume screen. This finds stocks that are showing above average volume. We could see a huge pop in DocuSign last week. Gap and Go. Same idea as Target, Roku, and Lulu. Gap and Go shows you that institutions are picking up shares, especially when you see volume. As we see on DocuSign, this is a company on the forefront of e-signature solutions that enables businesses to digitally prepare, execute, and act on agreements where normally you would have to be in front of a notary to sign a document. This company provides a service to businesses that seems to be gaining momentum and something that will probably continue to work in the future. Big cup and flat handle, looking for a push above 60 in the short term. Luna Innovations manufactures fiber optic sensing, testing, and measurement products for the aerospace, automotive, and energy markets. Continues this nice bullish trend. Fairly inexpensive name. Annual sales and earnings are going from a net loss to a net positive. 375% gain over the previous year into 2019. That's significant. And watching for IBD metrics to continue moving higher. Once again, this stock showed up on the 100% volume scan, something that we keep an eye on. Volume precedes price, of course. We had 2 days of above average volume as it breaks above the $6 zone and continues higher. Microbot Medical, just watching this name, net losses in the annual sales and earnings. So we're not really that keen on the stock, but it did show up above average volume last week, just something we'd like to mention. We also saw Zoomies in the youth apparel, men and women's action sports, footwear, equipment, etc. 51 states and Canada. Moving higher, no doubt, on sympathy with Lulu. Earnings were great. We had 112% beat, 17 cents last year versus 36 cents this year in the July quarter, reporting on September the 5th. So relative strength line climbing. I wouldn't chase it. What I look for is a little bit of a pullback or a flag in the short term that maybe we could get into in this relatively inexpensive stock. In addition, we have 3 stocks that are showing up on the TTM squeeze. Expedia, looking for a follow through. We have a blue or a cyan colored bar or two starting to show up here, giving us on a shorter time frame an idea that this will follow through, along with Restoration Hardware, RH, and Finisar, which is looking like a follow through as well. Tight Bollinger Bands, looking for this cyan bar to trigger a green dot or TTM breakout in the short term. Okay, traders, that's going to do it for me. This is Cousin Vinny coming to you from theclosingprint.com on September the 8th, 2019 with your weekend video newsletter. I'll send out the watch list later tonight around 11:30 on the East Coast, 8:30 on the West Coast, so be sure to look for that in your inbox. Have a great weekend. We'll talk to you soon, and take care.